In this video, traders, we're going to talk about trading intuition. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. All right, so if you've been around a while on the channel, I've probably done a few videos before on intuition, but I want to update this. And maybe you've found this video kind of a recommended video, maybe you've come to the channel, you're a subscriber. If you're not a subscriber, then really consider doing so, because we go into a lot of depth about mindset, strategies and stuff and everything we need to become a better trader, whatever level you're at, looking to get to the next station, the next level. So, make sure you are subscribed. And if you are subscribed already, appreciate your support. Anyway, let's get down to it. So intuition. Now, I've changed my mind a little bit about this, and I've kind of done a lot of study as well, reading articles, reading books, just really exploring this, because I feel that this is something that is either talked about or glossed over. And I kind of look at some of my old videos, and perhaps I didn't go into the depth that I think I want to now. In other words, I think intuition's always played a part in trading. It has to. We are human beings, and whatever you're doing, you might have something that you've done for 10 plus years, and you know how intuitive it is. I guess a good one for most people will be driving, right? If you've been driving for 10 years, you intuitively know about someone's road positioning, whether they're going to cut you up on the roundabout, whether they're going to pull out on you. You've got an intuitive nature, and that intuition, when I think about stuff like that, you're driving, it's like, okay, well, sometimes there's a type of car, there's a certain type of car often acts a little bit as they shouldn't do. It's a certain type of driver as well sometimes. It's the road positioning, it's the behavior before that moment, it's their speed, it's their direction, it's their indication or lack of it. And you put that all together quickly and you say, I'm going to hang back a bit because I think that guy's going to cut in my lane. Sure enough, he cuts into your lane. Now, a new driver wouldn't be able to recognize that, or less likely to be able to recognize that, because they haven't had the experience of it happening to them and of processing all the attributes and variables that come in with seeing that guy cut in front of you. And that's why actually the driverless cars struggle sometimes, because people are crashing into them, because I think that there's no intuition there. But that's another topic. So trading. The things we're trading, we've got, I think, two kind of, this is simplifying it overly, of course, but I think we've got two kind of emotional centers. We've got one which doesn't serve us, i.e. the feel of FOMO, for example, or I want to really make money on this trade, or I'm angry at the market, or I'm frustrated at the market, or I'm frightened of losing my money, or I'm frightened of seeing my profits come back, or I don't want to lose it. That kind of, I don't want to put a negative label on it, but those that can have a negative connotation. And then we've got the other side of it, which is emotions which help us and serve us. And those are the ones that just talk to you and say, this market's a buy. You have to find a good level to go along at this market. Now, this may sound fluffy and all over the place, but I really genuinely think, and especially when you study intuition, you look at yourself and you look at great traders. Yes, there are setups, there's strategies and all these things that we have a framework for, kind of a roadmap, if you like. But there's always that level of, you can just see the market is telling you, listen, the price action, the response is bullish. Yes, it's not gone up yet, but look, it's waiting. There's no sellers here. It's waiting for a spurt of buyers. And so, yes, now you go back to your operational plan and go, right, well, I want to get long this. How can I get long? Setups this, this, and this. Right, I want to manage my risk. I can't just buy it at highs, because then, you're going to get caught in potential noise. So I need to look for a long position that sets up this. And that's when you become a little bit more flexible with your entry, a little bit more flexible with your setup. And, you're not so rigid with it, but you're obviously strict with your risk management. And so you ask the question, where does this come from, and how do we harness it? What do we do? Now, obviously, harnessing the intuition is frequency of occurrence. If you are, we'll go to the driving analogy again, let's not sort of flip-flop from analogy to analogy, but, frequency of occurrence. If you're doing, tens of thousands of miles a year for years and years and years on the motorways, you're going to have a good feel for who operates in which way on the motorway. If you never go on a motorway ever and you just go onto it, then you're going to be, really kind of looking at the manual, so to speak, and going, well, I need to be this speed to overtake, I need to do this, I need to keep my distance on this. And in the real world, it's very fluid, very dynamic, just like the market. And so if we go back to trading, how do we harness our intuition? Well, Again, it's frequency of occurrence, but it's also listening to what our mind is saying. Now, I think the problem many traders have, and I've fallen into this trap before, guys, is we try to squash the emotions, right? We think that we should be trading without emotion. And it's because we're experiencing a lot of, like I said, don't label them negative, but negative emotions, like the frustration, the anger, sadness that we get from trading in the wrong manner. And these are impulsive emotions, you know, the impulse to dive in, the impulse to take a trade. Now, it's the key is to separate the two from an impulsive emotion to trade, I want to get in, to a theory or a thought about where the market is going to go. That comes at a different level to you. And that comes at a point of, right, well, you know, I've got an idea that, you know, everything's lining up. I can't put my finger on why, but I've got a good feeling, you know, the rug's going to get pulled on this. I've got a good feeling I don't want to be long on this. And this feels like a bit of a, you know, a bit of rug pull or whatever the situation may be. I feel like we're going to go stagnant for, you know, and then listening to that and then plugging that as an input into your trading. So as you get more and more confident with that, you can weight that more and more and more. And I definitely talked about that in a previous video where we're adding intuition as a weight. So as you get more and more progress, you add much more weight on that. And so you might end up passing on setups that look technically great, but you've passed on it because something's gone, you know what, that doesn't look right. And then you have to trust that and believe that. But as a beginner, it's hard to do because you don't have intuition. It's like a beginner driver, beginner pilot, beginner, whatever career it may be. You know, you don't have the intuition yet. And so you've got to really, you know, make sure that you understand that 95% of those emotions are going to be those kind of impulse emotions like, you know, fear, greed, snatching profits. And you need to be careful to manage those. Don't squash them, but manage those and be aware that those are what they are. And the 5% intuition of, okay, well, actually, I've seen this before. I've seen this kind of open before. I've seen this kind of after earnings move before. And let me just kind of push that into my setup. Then as you get experience, then that becomes more and more and more and more. And then the kind of impulsive emotions become less, but it's still becoming aware of them. So summary, guys, why I waffle a lot on this, because this is a topic I'm super interested in, because I think that this actually does separate, you know, super successful traders from average traders. And then, you know, in fact, that's the separation, I think. I think getting to the kind of average level and making good money at trading is fine. But then to go to that next level, that's when you really dial into that intuition. So summary, guys, be aware, I think, in my opinion, there's two sides to the emotions. You've got the impulsive emotion and you've got that intuition that's just telling you something. Learn to distinguish between the two. Be mindful about not squashing emotions down, and be aware, and maybe, you know, write a journal or have some self-talk, talk to yourself in the mirror, whatever, who cares what you need to do. You know, we're all trying to get to better level as traders. And so learn to recognize the difference between the two, learn to manage those, and learn to harness this side, which is telling you, which is your subconscious or unconscious, whatever you want to call it, your experience, just talking in your ear and saying, hey, you know what, you know, I think that's a good place to be buying. I think this market wants to rip up, or I need to be careful about, and then just plugging that into your setups and see how you get on. You know, it's not always going to be right. Of course it's not, because, you know, you can't always be 100% right. But the more you harness it and allow it to be part, then I think that's how you see much more growth. But being cautious that on that side of things, those impulsive emotions don't serve you. And so not melding the two together, not confusing the two, which can become that when you squash everything, you don't allow that intuition to grow and blossom. All right, guys, so a bit of a different one. If you like this kind of stuff, then yeah, please give it a thumbs up and let me know your thoughts in the comment section below. If you want me to talk more about this, and this is something that I do a lot of research on and I'm passionate about, because I believe that this is, you know, once you've got your setups, your strategies and stuff, this is kind of to take you to the next level, to take you, you know, to that 8 figures, whatever figure you need to get to. And so, yeah, let me know, guys. Otherwise, keep your risk management. See you next one. Bye-bye.